When that dude died, guess what the business did? It died.
Yeah.
But a business that can run without that business owner is usually probably 2 or 3 times more valuable to the buyer than,
Sure.
And a lot of times that they won't even buy it because they know when you go, the business goes, right?
Right.
I could put 100 business owners in a room of any size, any industry, doesn't matter. Just put them in a room, and you say, okay, I need to find 5 or 6 people who are concerned about, where we are. I would have a really tough time finding that 5 or 6. If I have a good banker, that's going to be a better strategy than if I were to say I feel like I'm going to build my wealth most effectively by finding a quarter point less on a loan. You know what I mean?
Yeah.
The larger banks kind of beat that into the marketplace, and we kind of go in there and have to undo. It's not unusual to see somebody from the Midwest or even California looking at Chattanooga for development opportunities. So when you come from those areas, whether you're buying a residence or you're buying a commercial building or you're trying to develop, it becomes pretty obvious quickly that, the dollar still goes a bit further here in Chattanooga than it would in Los Angeles, California.
Everyone, welcome back to another episode of Spectruss Speakeasy Podcast. I've got Ron Jones with me, Regional President, SouthEast Bank here in Chattanooga. 40 years experience in banking now.
Yeah. You had to bring that up, didn't you?
I mean, it's amazing.
You
That's
just
awesome.
had to. It's a long time. It's a long time, and the industry has certainly changed dramatically. But I've been at Southeast Bank. Came over about 7 years ago to start the bank from really scratch. So it's been a very interesting and energy-filled 7 years.
I bet. But you've got, obviously 40 years, and you've been at multiple other banks, right? Tell me some about that.
Exactly. So I started back in 1985. There were 2 banks in the state of Tennessee that were kind of the primary banks, First Tennessee at the time and First American. First Tennessee is First Horizon today, so they've kind of they've grown dramatically, but they've maintained their name. Conversely, First American ended up getting purchased by AmSouth along the way. I stayed for a little bit through that, and then left for another organization. And today, AmSouth became Regions. So that Regions was kind of here in Tennessee was the predecessor for First American. So anyway, so I stayed there for about a third of my career. I went to work with a community bank here locally for about another third of my career. So I've worked for the large banks. I worked for the small banks, which I think is interesting perspective for sure.
Yeah.
And about 7 years ago, started Southeast Bank here.
Awesome.
So that kind of catches you up on how I got here.
So over those years, I know you've had to see a lot of things change. Kind of hit the highlights. Were some highlights of what you've seen change the most over the 40 years?
Yeah. Well, I would say 4 words: regulatory is what has changed dramatically. It's a different industry today. So when I first got started, there's always been regulatory oversight, no doubt, but it has gotten much more concentrated over the last 4 or 5 years. And so I can remember being able to talk to business owners, and they had ideas for business startups. Matter of fact, we worked with a local transportation company that ended up growing into a multi-million-dollar company. Ended up going public, but we helped them with what essentially was seed capital back in 1985, and so. Things have changed in the industry in the sense where that becomes more and more difficult from a risk standpoint. But I will say this too, that there have been other funding sources that have kind of come up and grown up over that period of time to kind of take and fill in those needs. But I'd say that's a large thing. Certainly the competitive landscape has changed. There's 28 banks here locally, and people continue to come here, particularly that are regionally, maybe in smaller towns, and they're looking for growth. And so one could argue there's too much capital chasing too few deals. But and then the idea that what hadn't changed over the last 40 years is connecting. We communities are really impacted primarily employment-wise and economic-wise by small businesses. I mean, VW gets lots and lots of headlines, but when you start looking at family-owned businesses, and these are guys that have 5 and 10 and 15 and 20 employees, like Spectruss,
Yeah.
those are the backbone of the economy. And I'm not talking about Chattanooga; I'm talking about nationally.
Yeah.
So our focus on keeping our communities healthy, we do that most directly by making sure that we're making it a fertile ground for small business. And 90% of the folks that we do business with will be family-owned
Yeah.
businesses. So that hadn't changed in 40 years, and that's probably why I'm still here.
Yeah. I mean, that's good to hear because it's always, I mean, I've got my own personal experiences, and
Yeah,
it feels like the odds are stacked against you as a small business, and you're trying to
yeah,
make it through that.
yeah.
I was listening to Shark Tank guy, uh, uh, Mr. Wonderful,
Kevin.
Kevin O'Leary,
Yeah,
and he's
Kevin.
talking about how the first 5 million is just brutally hard, and
Hmm.
then from 5 to 10 million is also hard, and then after that you get enough working capital and you've got some experience under your belt, and then it gets easier, and
Right.
you get to where you're in a less saturated environment, trying to you know steal from one pocket to put in another pocket to keep things moving.
Right, right. Well, there's definitely the idea of scale there that happens, and that's an area that um, has been segmented. As I mentioned earlier, the banking industry back in the mid '80s would certainly be involved in a fair number of startups, and this whole industry now of funding sources, and a lot of it private. I mean, it's been a lot of wealth created, and so I find ourselves a lot of time the banking community, not just on startups, but even on mature companies are a lot of times competing with private capital out there that just is
Right.
looking for a higher yield. So it's been interesting.
So I got to ask you on, you've obviously seen a lot of change over 40 years when it comes to like rate cycles, recessions. I mean, borderline almost depressions when we
Yeah,
look at like
yeah,
housing market
yeah,
crash,
yeah,
booms. I mean, what's your outlook on it right now moving
yeah.
forward?
You know, so I was just driving in today to do this segment, and the inflation piece continues to worry me. There were some numbers that came out this morning that it's just one report, but it seems like that inflation is not working its way down toward 2%, but maybe up to 3.5 or 4. Again, it's just one report, but as you look around and you see what's going on, I mean, that inflation I mean, a lot of people refer to it as kind of an invisible tax, and it really is.
Yeah.
So that concerns me a bit, and it concerns me because as the community grows, and as one of the things that I think super important is that the wage growth locally, keeps up and shows consistent growth, and you kind of erase any kind of wage growth with inflation. So, it's not 9% like it was when the last reading a couple years ago before they started raising rates, but it is important. I think business wise, and I tell the business owners that I meet with, I could put 100 business owners in a room of any size, any industry, doesn't matter. Just put them in a room, and you say, okay, I need to find 5 or 6 people who are concerned about where we are. I would have a really tough time finding that 5 or 6.
Mm.
So, in our business, Sam, so people can talk and they can say, well, I feel really good about it, and they may go hire someone
Yeah.
because they want to expand their staff. um, that is not a fixed cost, right? I mean, the layoffs happen, and if you figured out that that was not the right decision, you could kind of undo that decision.
Right.
So hiring is important, but it's not as long term indicator as business owners buying equipment
Yeah.
and finding new space and fixing it up,
Yeah.
or expanding their building, or building new buildings. Those are all projects that take an enormous amount of time to pay for themselves. And so business owners don't go do that unless they can look at 3 or 4 or 5 years and say, I feel pretty strong, not just about my revenue, but also about my margin.
Right.
And so I was thinking this morning. I mean, I would characterize it as pretty solid in terms of the outlook for the business community
Yeah.
because of what I just said. We're seeing a steady diet. It's not super good like it was in 21 and 22 coming out of pandemic where there was just people were just
Capital
grabbing.
expenditure
It's
everywhere.
been
Yeah.
insane,
Yeah.
but it is solid. And so as we look here locally, Chattanooga's always been, at least as long as I've been here, nestled between, Atlanta and Nashville, and they have a lot more growth, maybe in some ways a little sexier in terms of the development that you see,
Yeah.
but they also the downside is more significant. So Chattanooga just kind of chugs along,
Yeah.
does pretty well when times are good, but also doesn't do quite as bad as those major cities when things get tough.
Yeah.
Um, so yeah, I think the business environment is solid. We're seeing good demand. I don't think finding access to capital for a business owner today is. I mean, if you have a business that has good principles and shows that it can make money, I would think finding capital is probably one of the least worries that a business owner has.
Right.
Real estate wise, which is really important because that's a big component, of our bank and of our community. Um, Multifamily's been, a ton of those have come online the last 2 or 3 years. The absorption of those seem to be going okay.
Yeah.
There's been a little, the growth in rents has definitely subsided because of the supply issue, but I think the absorption is reasonable. Um, uh, Single families with residences, which are a really important part of the economy. There's not enough supply of, and honestly, I'm going to be at a on a phone call today that I'm sure they're going to tell me, these are analysts that we do business with, that they're going to tell me that we're short here in Hamilton County by 5,000 lots. I mean, some insane amount of number.
Right.
So even though the interest rate environment has made buying homes a little tougher, for sure, they're still moving. People are still moving here, not like pandemic, right?
Right.
It was insane the
It's like
amount of folks that were
free
moving
money
during
almost.
pandemic.
Yeah.
It slowed, but it's still positive. So I think the residential piece, is in good shape. Land is a lot more expensive. The restrictions to get stuff done, the cost and the time is enormous, but it's still getting done. And those are two big components. And I think the other thing I would say is, we have a really strong downtown area. So you can just look at the number of hospitality projects that have been put in. One might argue there's
There's a ton
a
of
little
them.
bit oversupply of those for a while, but that will probably be okay. I don't think it's the the overhang is so significant that it will create lots of problems. But the average daily rates that are being paid, at least on the properties that we finance, they have definitely have settled. Not
Yeah.
crazy, but $4 or $5 a night over the last. And I think the last thing I read from the Chamber of Commerce, to fill the hotels, the rooms that are available, we need an extra. I mean, I don't know, 250 or 300 people every day staying downtown. So
Yeah.
that number's not crazy.
Right.
I think it's reasonable.
I've
So
got to think that those companies have great analysts themselves when they're making that sort of investment in the market, and to see all the big players continuing to build here. I'm like, well, they must see something. And I've got a feeling it has something to do with Nashville and Atlanta overflowing because from what
right,
I've heard, a lot of my development friends, Nashville's, I'm not going to say it's tapped out,
yeah,
but
but it's
it's hitting a ceiling,
pretty
it seems
hot.
like, for now. So it seems like all eyes are on that corridor between Nashville and Atlanta. We're
Right,
right in the
right.
middle of it.
Well, and I think too the other thing that happens, Sam, at least as folks move in, because before pandemic, we might see capital or developers coming from Birmingham, Huntsville, Nashville. 2 hours, maybe three.
Yeah.
It's not unusual at all. I mean, we've got several clients that are in Dallas.
Yeah.
It's not unusual to see somebody from the Midwest or even California, looking at Chattanooga for development opportunities. So when you come from those areas, whether you're buying a a residence or you're buying a commercial building or you're trying to develop, it becomes pretty obvious quickly that the dollar still goes a bit further here in
Yeah,
Chattanooga than it would in
sure
Los
does.
Angeles, California.
Yeah.
So
All right, so I've got to ask and get to the big question here for me. I'm curious in your answer. Community banking versus big banks. I feel like it's a lot of small business owners have experienced this, where they're not quite large enough to, I've experienced this for the bigger banks. I'm a very small fish
hmm
for the big
hmm
banks as a business owner, but community banks, I feel like maybe I'm a mid-sized fish, maybe in some large, probably not, but tell me some about that. I mean, because how you all position yourself, and what are your thoughts on that?
Well, so it really is, in my mind, more a matter of distribution. And when I say distribution, I mean do you distribute financial services and products to the market? Okay, so what's happened over the last several decades is the larger banks have built a significant investment in being able to reach consumers and small businesses, and I mean direct mail and other things that they would go about. So they're not throwing humans at that market segment. They're throwing technology, um, and we are as well for sure. But our you know our goals here in Chattanooga, and I would say this is true with most community banks. No community bank's going to have 25 or 30 offices. I mean, nobody's got that kind of wherewithal except the really, really large regional banks you talked about. So, how do you go about doing it? Well, you could just say we're going to only have one office, um, and we'll just have to try to concentrate business in that one office. Or you can say, like we have, this is a market that probably would take 4 or 5 offices for us to fill out.
Yeah.
We've got 2 today, so have got 3 more in the back of our minds. We need to go expand at the appropriate time. Um, but what happens is, that business owner that's doing $1 million of revenue or $2 million of revenue, they usually are being serviced by someone at the local branch, and that usually is someone who is not a commercial lender. That the larger banks tend to commit the commercial lending. There's a cost to
Sure.
commercial lenders, and the idea that you're going to pay somebody, a certain salary, and they're going to go try to find 50s and 75 and $100,000 deals. The economics are really tough to work out. So what happens is where we find a lot of opportunity, and I would say community banks do as well, others do as well. Um, those million and $2 million a year sales company, they don't have a CFO.
Right.
They might have a controller, maybe not. Um, um, and when business owners go into business, I mean, they usually are going into business because they're passionate about the market.
Right.
And they don't go in. Entrepreneurs don't sit down and think, well, gosh, in 2 or 3 years, I'm going to have to contend with labor laws and payroll issues, and I mean,
Right.
it's just not. They would freeze them. They just
Yeah.
yeah, entrepreneurs just don't think like that.
Yep.
So what happens is those the community banks, we designate a lot of resources, human resources, to those companies doing 1 million, 2 million, $3 million a year. So, in that sense, there's less competition with us and another community bank as there is, hey, with these 5 or 6 really large banks in town.
Yeah.
Can we beat them to the punch with those family owned businesses that are in that revenue range? So it is difficult. I find people when they bank with the larger banks, I tend to like our chances
Yeah.
of helping them. Um, but the one thing that the larger banks have, generally speaking, is they've kind of beaten into the client base, is this idea that we're going to be a low cost provider. We're going to be a low cost provider, and so. In some ways, we work up against the stream on that. Like
Right.
if we were to call on a business owner, one of the first things we would make sure that the business owner, that we understood is, what are your goals over the next couple, 2 or 3 years? What is it you need from us to help get there? And the where we do really well and is where that business owner looks at what we provide and says, you know what, I'm going to build wealth at a greater pace. If I have a good banker,
Mm.
that's going to be a better strategy than if I were to say I feel like I'm going to build my wealth most effectively by finding a quarter point less on a
Right.
loan. You know what I mean?
Yeah.
And so so the larger banks kind of beat that into the marketplace, and we kind of go in there and have to undo, you
Right.
know, lots and lots of advertising on that behalf. So it's real simple for us. I mean, it probably is more of a commodity business for the large banks.
Yeah.
We do not look at it as such, and if we did, we should sell our bank. I mean,
Right.
the large banks do great for who they are,
Yeah.
but fortunately, our cost structure is such a way that we can go do 50 and $100,000 loans and $1 million loans, which for the large banks are, they'll have that much payoff before we get through this interview.
Right.
But it's a profitable segment for us, and we beat. And I'd say the community banks, tend to win in the market with people. Everybody's got technology.
Right.
Okay, I mean, my cash is green just like another bank's cash is green. So where you really make a difference is where you develop bankers, and those business owners are saying, you know what, I'm going to bank with this banker.
Yeah.
They don't really care the name of the bank. They just care that they're going to be able to stay connected to their banker because they trust them and they've had issues over the years that would lead them to believe that they can be confident that when the banker tells them something that they can actually deliver.
Right. Gotcha.
So
And you guys entered Chattanooga, was it 2019?
yeah,
Okay. And so I had notes here about 28 commercial banks already here at the time. So what did you
yeah.
all
Why?
yeah.
Why?
Uh,
Well, there are a couple things going on for sure. I'm not sure any bank actually asked that question in that manner. I think that's a great question. When I did an interview with the Free Press, that was the first thing they got asked, and it's obvious. A lot of times a bank just says, "Hey, I'm located in this market or that market, and Chattanooga's in the middle," and so I don't care if
yeah.
there's 28 banks or 52 banks. We got to go fill in the pie.
Yeah.
But for us, Sam, I think two things. One, I felt like Southeast Bank was as close to banking as we could get in today's environment, like I was used to 20 or 30 years ago. And by that I mean people, not committees, not somebody in another state. Two people just sit down, we figure out whether or not we can help you.
Right.
And if so, then we decide we go do it. And we're also, when you're out there talking to small businesses, sometimes you have to deliver bad news, which is to say we can't help you, or at least not in the way that you want us to.
Yeah.
So if you remember, capital markets had gotten sold
Uh-huh.
along that time. So they were a major in terms of community bank that was, centered here in Chattanooga. They were a major player. And so, but over that time, as banks grow, and if that is a bank's goal, processes and structures just have to change to accommodate that. And so, and that's not bad or good. It's just the honest truth. So we looked around and said, okay, capital market as we knew them didn't exist anymore. The people's still there, right? And,
Yeah.
and they're still in the marketplace. But in terms of that organizational structure, they're not there anymore. They're Pinnacle Bank,
Yeah.
and Pinnacle Banks is not, has 100 other markets than Chattanooga.
Right.
Many larger markets than Chattanooga.
Yeah.
So we felt like there was an opportunity there. When we looked at the local market, I couldn't determine. There were definitely community banks here. I didn't feel like there were community banks that had the wherewithal and the resources to really become kind of the paramount Chattanooga community bank.
Yeah.
That void that was there was made when Capital Mart, kind of sort of went away, at least in name. So, and I would say the other thing is this market. I mean, you can go find some $50 million credit deals, but they're not that many. I mean, it's still a pretty small market when it comes
Yeah.
to the banking side. And so the question was, who is really doing good and who is really hustling and being successful in that, million to $5 million revenue.
Right.
And we felt like that was overlooked. I did. I felt like that was overlooked. And so we started out of the gate, and one of the things that is so important, I think, is that you allow your bankers to be bankers, right?
Yeah.
In other words, like not just throats that things pass through that are being said by somebody else,
Right.
but they're actually bankers. And so yeah, that's what I felt like we would have an opportunity. I mean, we're just a shade over $500 million in loans on the books, another 140 or 50 million that we've got committed. So, 650. And even though it's been been 7 years on the calendar, we lived through something called pandemic
Yeah.
that some might argue it's only been 6 years. But anyway,
Right.
yeah,
Yeah.
yeah.
Very good point. So I had a stat here I put down 80% of banks, and I'm curious on your thoughts on this. 80% of banks and credit unions plan to expand small business services in 25 and 26. And apparently that's up from 65% in 23. And community banks are leading this charge. Yeah. I don't know what are your thoughts on that. Sound accurate or a reason for
I think
that?
so. I think so. Again, when you look at the segments, the consumer market, why would a consumer come to a community bank? Okay, well, um, we lost credit cards as an industry a decade ago. So now, if you look at any 20-something-year-olds wallet, if they even have wallets, I got or the back of the phone, I guess.
Right.
These are large issuers, Discover, Visa, Apple, Cap One, just whatever.
Yeah.
And so, I mean, do we sell some charge cards because we've got clients that need them? Well, sure. But that part of the market, kind of went away. If somebody needs a used car loan, they do what I do, which is go to the credit union,
Right.
right? And so that part of the market's kind of away. So when you look at it, I guess what I'm saying is that either by design or by default, there are certain segments of our markets that we have either yielded or decided we just can't play in because it's too expensive.
Yeah.
The amount of money that's spent on charge cards is enormous, and I would argue there's very few community banks in the United States that could keep up with that and do it in a meaningfully well way. Right? It's one
Yeah.
thing to have it; it's nothing to be really good at it. So when you start moving up the kind of the chain, the food chain, the next is small business.
Yeah.
And again, you can move beyond small business to large businesses. We a lot of those times those guys are looking for certain services and certain support that again, as a community bank, we don't have an endless supply of capital that we can just go buy the latest everything. We have to kind of pick and choose.
Yeah.
So that small business segment that you're talking about, those are the people who are going to be, our best clients 5 and 10 years down the road.
Right.
And so everybody is really, really focusing on how they can bank those folks because at the end of the day, those are the clients that help our communities grow.
Yeah.
They add people. If they decide they want to go buy a building, they normally are not going to go buy a building in Phoenix, Arizona.
Right.
They'll buy something here locally in our backyard. So it's a very fertile ground. And the other thing that I will tell you, this has been true my whole career, Sam, is people can argue about what small business means, but when I say small, just to be really detailed about it, I would say 0 to 5, maybe $10 million revenue,
Okay.
and that means some of these people have 40 and 50 and 100 employees, and you can say, well, that's certainly not small. But when you look at the breadth of the revenue distribution of all the companies that are located in Hamilton County,
Yep.
it's kind of that 80-20. 80% of those will probably be doing less than $5 million. So when you get those guys, They tend to lean on their banker because, again, I said earlier, they don't have CFOs. They don't have controllers, so they're going like to the bank. Hey, what do you think I should do about this, or what's the best way to reach this next plateau? And they're very sticky.
Yeah.
They're very sticky, and they're sticky because these business owners, and you know this, there's only 24 hours in a day, and most days you need 30.
Yeah, you got
So
to partner with someone and
yeah,
delegate where you
and
can.
so when you make that connection and you develop a level of trust and confidence, in your banker, and same thing with an accountant, same thing with your attorney. You're just not going to go invest a ton of time trying to find a new one unless there's some issue that makes it terminal to the relationship, and that doesn't it happens, but it's not that often.
Yeah,
Yeah,
makes sense.
yeah.
So it sounds like targets between 0 and 10 million for
I
small
think for small
businesses.
business, that's
Yeah.
that's a fair range.
And it
Yeah,
sounds like, really providing service over, like you already mentioned, as opposed to the lowest, dropping
yeah, yeah,
25 basis points. You're more focused on service and
yeah.
providing value in
Well,
that way.
think about it like this. So, if you were to go to a large bank, any business owner, and I mentioned their primary, they're usually not dealing. Um, the larger organizations might have 4 or 5 bankers here,
Yeah.
and they're chasing, $5 million deals, $15 million deals, $50 million deals. And so what happens is that business owner gets relegated to the branch. And historically, and it's true for us as well, the branch is like it's a ton of turnover there. So if I had a dollar for every time a business owner says, "Well, I've dealt with this 23rd Street branch for 15 years," well, but what human do you talk to? They don't know.
Yeah.
And so that is the way the large banks have determined they want to that they can deliver product in a profitable way to that $1 million a year sales guy. Um, we throw people at it, right? I mean, like we train them, we give them skill sets, and they're expensive.
Yeah.
So while the larger banks may say, well, that $1 million a year business owner needs to find us on the website or it become electronic, it's stuff that where there's not a human involved.
Yeah.
We apply humans and they cost money.
Right.
And so we, it goes back. You can't, if you want a Chevrolet, you go buy a Chevrolet. Everybody wants a Cadillac, including me, if I could pay a Chevrolet price, right?
Sure.
But at the end of the day, if we're providing you a higher level of touch, attention, and service, then there's got to be some margin in it for us to be able to do that.
Sure.
That makes sense.
It does. Yeah,
Mhm.
absolutely. So, talking about Chattanooga business climate, we've already touched on this, but what businesses you see like growing and trending right now in the Chattanooga area or
Yeah,
Hamilton County?
yeah,
We've already talked about like hospitality is obviously growing,
yes,
and it seems like some manufacturing. At least larger ones, like in the past decade, what we got VW, Valker,
sure,
Amazon. But
sure.
is there something else you're seeing trending, maybe in small business, or what are your thoughts there?
For us, we're not too picky about the industries that we serve. I mean, as long as they're not immoral or illicit, or illegal, we usually we look at the business owner
Yeah.
and less at the industry. There are certainly, between here and Bradley County, manufacturing has always been, one of the highest per capita in terms of employment, job employment in the state, and it's still good. For every one of those larger guys you just mentioned, there's dozens and dozens and dozens of smaller guys that are, making certain parts or providing certain services into those. And so, I don't know that I can point to just one. I can tell you retail businesses do okay as long as they don't have to compete with Amazon.
Right.
And so, well, you know what could one do on the retail side that doesn't compete? Well, last time I checked, you can't go get your hair done or your nails done or whatever else, services. Amazon doesn't do that, at least
Right.
not yet. So
Yeah.
I don't know that there's one. I don't know that there's one or two that I would say would lead the way, but I would tell you it's a fertile environment The incubator helps a ton. They've got these accelerator funds for people who are just starting out that maybe lack capital but have a great business plan.
Yeah.
So yeah, I would think it's pretty consistent across all industries. I don't know that there's one industry that I would tell you that we're seeing. Transportation's been really tough the last couple years, coming out of a pandemic. A lot of equipment got bought. A lot of products got bought, right? People are sitting at home
Right.
and they had nothing to do, so they go buy stuff, I suppose. So, so there was too much equipment on the road, in 22 and 23, and in 23 and 24 and part of 25, you begin seeing, I mean, an inordinate amount they all have to have interstate commerce carrier license, ICC licenses, and those are just getting turned in by the thousands, and that's the guy with 2 trucks or the lady with five trucks. I mean, there a lot of them are small, but there's been a lot of large ones too, in terms of numbers. So that industry's probably been the most difficult time the last couple of years.
Yeah.
But having said that, the ones that are left are stronger. This happens anytime there's a kind of a settling, and if we can get some of the challenges economically behind us, that are kind of like man-made. I'm talking about wars or
Right.
tariffs or whatever's going on. I think the transportation is going to be just fine,
Yeah.
and the ones that are there and able to enjoy the lift they'll find a way to build some significant wealth in the next 4 or 5 years.
Yeah.
So
Yeah, I'm sure.
yeah,
What about some of the challenges for like Hamilton County businesses getting loans? Is there something that stands out to you there? Or what are some of the common challenges you see?
I don't think there's anything geographically related about why somebody can or can't find their way to capital. I would say, there's probably a quick list. I mean, when business owners like I've not found the first one that got into business so they could get better at reading financial statements. That's not what
Yeah,
that's
so true.
not what drives them.
Yeah.
And so there is this constant tension with the business owner, because I mentioned earlier they usually don't have CFOs, and so they're working with the CPA, but maybe they're just doing tax returns, and even those aren't even done on time usually. I mean, they're extended usually. So not having a it doesn't have to be super in depth, but not having a good set of financials. Like when you give your financial statements to somebody, they really should answer questions, not create questions.
Mm.
And so, it's a shame, and it does happen a lot more than you think, where a really good business, um, you know, needs capital, and when we're trying to figure out financially where the business is, it's just it just they just cannot provide the documentation, or if they do, it is so late that it almost renders it useless. I mean, if you give me today, you can finally say, "Oh, I finally got my 2024 tax return filed." I'd be going like, "Looks like it's 2026 in my
Yeah.
watch."
Right.
That's two
Right.
years ago, Sam.
Yeah.
So anyway, yeah, I think the financial reporting piece of it, I think there is a little bit though. There are so many, Sam. There are so many sources of funding that I don't think we do a super good job. I mean, there are banks in town that do SBA lending.
Uh-huh.
I know that was on the agenda for today. We do not, but there are plenty of banks that do, and they're willing to take a little higher risk of a credit because of that. The bank's willing to extend credit because they've got a government guarantee. The guys down at Bright Bridge, Bill, and those guys have just, I don't know, just tons of tools. They've got money from the city of Chattanooga that they administer for businesses that are located within the city of Chattanooga. And
Yeah.
you go in and you talk to them, and it's usually unsecured. I mean, it's $15,000 and $30,000, and so trying to find collateral for that small loan is usually not too satisfying.
Yeah.
And so, but I don't know how many people necessarily know about that. I think sometimes we need to do a better job communicating to the business owner. A bank is a great place to start,
Yeah.
but a bank has connections.
Right.
So in other words, when you come, if I'm not able to help you as a business owner, I have a really high hurdle in my mind of saying I at least want to come back to you and say, Here's who I think you can help you, even if it's not me."
Right.
So that I would say that's probably I would say financial information. I would say knowing exactly what's available in the marketplace will be the two biggest things that probably can kind of keep people from finding a happy home on the credit side.
Yeah. So I've got to ask about. We don't need to go in depth, but your thoughts on AI and how it affects banking.
Yeah, yeah. Well, so as I mentioned earlier, we're a fairly regulated industry, and AI is a fairly new technology, moving quickly, right?
Yeah.
Super rapid, and so that is usually the purview of the larger banks. I'm talking about J.P. Morgan, what we call money center banks, for several reasons. One, they've got the resources to make something happen in that arena. Also, too, when you look at the assets that they hold, the amount of assets they hold, um, rather than the regulators dealing with 3,000 banks across the United States, which maybe there's 3 or 4,000 left today, down from 7 or 8,000 maybe a decade ago. Um, that's not very efficient. And so what usually happens is those federal regulators that are saying, okay, how are we okay with AI being used?
Yeah.
They usually will start with those guys, and they have already.
Yeah.
And it'll take a while to trickle down, certainly for the medium sized and even for the community banks like ourselves. But I can't tell you. We need to use it to make, just like everybody, to make our employees more productive. Um, and we could do that, I think, without stretching too much. The challenge for us will be as quick as we possibly can to turn our heads away from internal processes.
Yeah.
So indirectly, if we could decision your credit request in a day instead of three, I mean, one could argue, well, Sam, that's good for you, right?
Right.
And Sam may say, yeah, that is good for me. Um, but when I say we need to very quickly turn our attention away from necessarily internal processes and systems to saying how does the use of this tool make our clients' life better,
Yeah.
more enhanced. One of the ways that I'm guarantee you it will happen, it already has begun, is on the cybersecurity side. So we talked about this, not too long ago, but it used to be a lot of the risk on the banks, were involved in their loans. I mean, can this business owner pay me back? And if not, then what do we got to do?
Right.
And the deposits were just, it was almost like, it was very static, just nothing. I mean, did somebody pass the bad check from time to time? Yeah, but it wasn't crazy. Well, today, I mean, it's probably not a month goes by that we don't have one or two instances where we have business owners that have been involved in some kind of fraud,
Yeah.
cyber fraud, and those numbers are not hundreds of dollars; they're 5 digits and 6 digits, and one time last year 7 digits, and so that we'll continue to invest in technology
Yeah.
to help assist us and our clients because we're on the same page there. A risk for our client is a risk for us on that deposit side.
Uh-huh.
And a lot of that's education. So our bankers spend a lot of time when we talk to business owners. We'll talk about the business for sure, but our attention turns really quickly to, hey, tell me how, like when you wire, tell me what happens,
Yeah.
who's involved in that. When money comes in, you're writing checks or you're doing ACH because each one of those have a little different set of risks to them.
Right.
So that's where I really see over the next 4 or 5 years AI really being impactful, not just for the bank, but by extension to the customer as well.
Yeah, definitely. And I'll geek out and go on and on about this. So I gotta keep myself focused here. There's like so many questions. I did have a stat I wrote down here. So in 23, financial service apparently they experienced over 20,000 cyber attacks, and that resulted in 2.5 billion in
Yeah,
losses. And so some of the theories on AI is that it can also help with security. But I
yeah,
like that you mentioned that you have the human element of analyzing the actual processes of what people are doing. Whether
yeah,
it's ACH, who's going to be involved, and maybe they have company debit cards or
sure,
payment processes. And I remember last time we met for coffee, you were talking about how you set up certain systems to where you basically don't give any risk or potential exposure directly to their account. You set up other
sure.
accounts in between.
Yeah,
And
right.
I think that creative problem solving is necessary because
Yeah,
if I don't know if you can unleash AI on that yet. Maybe you can, but it's going to
yeah.
take a creative person to even guide it there.
Well, yeah, and I think you almost have to at some point, but I think the bad guys will probably, be unleashing it, along the same line, saying how do we really ramp up our efforts here, and they're smart and they are nimble,
Yeah.
and with it doing most of their damage digitally, it is not hard to stop in one area.
Right.
If it gets too much attention or heat and move to another area, and I don't mean geographical, I just mean another area of the fraud spectrum, very very quickly. It doesn't take months and months for them to figure it out. It's hours. So
I'm also curious in AI, and I'm kind of jumping around here and linking these together. But again, I get curious in this part because I know, like with myself, when I started out, for instance, I maxed out multiple credit cards to buy the computer, to build
sure,
out the office, and I slept on the futon in the back of the office.
yep,
And it was like I had no capital investment. I cut trees the month before for 30 days straight and made 20 grand cash and put everything into starting the
yeah,
business.
yeah, yeah,
So it's kind of like a, stealing from one pocket to pay this one,
yeah, yeah,
and so for a lot of people that are doing that, and I've seen this for a lot of our clients, especially company like home service businesses, they'll
mhm,
be really good at a trade and like I want to go out my own, but they may not have the capital to get it done. Um, they're always trying to find a way to get it done because they believe in themselves, the entrepreneurial
mhm.
spirit. And I am curious how AI and the increase in all the technology we're seeing for analyzing every little detail. Um, and to bring it full circle back when we started 40 years ago, you're talking about how deals could get done almost on a handshake in a lot
Yeah,
of ways.
yeah.
Um,
Easier for sure, yeah.
and there's this kind of outlier where if people actually believe in someone, because it's
Mhm.
so hard if you don't have that included in the mix and it's just all regulatory where they have to check every box. I don't know. What do you see that being like in the future, and
Well, I
how's
mean, that squeezes that out. I mean, look, so if you were to go online and as a business owner say, "I'm gonna go borrow money," but and I don't really care who I borrow it from, I just gotta have money. Um, I mean, they can make decisions, and they do lots of times in minutes or hours,
yeah,
okay? But that's because they're just running algorithms, and you're either within the sandbox or you're outside the sandbox.
right,
And if you're outside, then it's a thanks but no thanks. And if you're inside, then we'll extend the credit.
yeah,
So I think the reason I bring that up is because it there still has to be this. I mean, where we're going to find value as an industry, I think, for our clients is this idea that how do you inject back into the process this idea about wow, this business owner doesn't doesn't look like at this point that they really could support the repayment of this credit.
yeah,
In other words, it's maybe more projection based, but I really have confidence. And there are people we all know, including yourself, that if they ask you for money, no matter if you're a bank or not, and you're going like, this dude, he'll pay me before he eats. I mean, I know, I just know that. You know what I
yeah,
mean? How do you balance that? Because at the end of the day, um, you know, that entrepreneur, um, there's a couple of things that I wanted to cover about kind of what we see consistently in criteria or traits
yeah,
of entrepreneurs. The vast majority of those are undercapitalized. I mean, you just mentioned that. I mean, that
yeah.
that is. uh, I don't know about the cutting trees, but that story could be told by literally, probably 80% of the people who've started businesses.
Yeah.
The other thing that we find that's a common trait of successful businesses over time, particularly for startups, is this idea of deferred gratification.
Yeah.
And so what that means is that 20 grand that you created by cutting those trees, I mean, maybe you could have bought a better futon
Right. Yeah.
or whatever, right?
Uh-huh.
But what did you do? I stuck it back in the business, and I'll get the better futon later.
Yeah.
And so I remember when I was banking up in Cokeville for a number of years, there's a guy, he was doing $6-8 million of revenue, um, and he rolled tubes like metal tubes,
Okay.
and that that cat loved rolling metal tubes. He was probably 55 years old. He wasn't married. Um, Enormously wealthy, by the way. I mean, because the business was probably 25 or 30 years old. Um, Still had, yeah, what a futon, but it was a bed in the back of the of the plant.
Yeah.
And when things got tight or it needed his attention, he'd roll tubes, go take a little bit of nap, come back and roll some more tubes. So I bring that up because I guess what I'm saying is that's a guy that the idea of deferred gratification doesn't stop in the second or third or fourth year. It's this idea that the business owner is saying, "Hey, listen, I'm willing to tough it out and to drive a smaller car and live in a smaller home and do everything smaller
Yeah.
because this business is so important, and I'm going to continue to feed it everything I can."
Right.
And so I would say those are probably two of the over the last 40 years of my career, they've been consistent themes. This idea that they're undercapitalized. So what's the best way to try to cobble together enough to get going? And then this idea that where that business owner decides a bigger car is more important or a bigger house is more important, most of the time it does squeeze off because there's only a limited amount of cash to go around, and
Right.
you've got to feed the business and say, hey, one day this business is going to feed me really well, or
Right.
you say I got to keep eating, and if the business makes it, it makes it. If it doesn't, it doesn't, and those don't usually do too well.
Yeah.
Yeah.
Real quick, are there a couple of tips that you give for businesses that are looking to get more working capital? They're in that small stage, maybe they're a startup, or even just right now they need to invest in something to help
Right.
them get a loan. Is there like some
Yeah.
tips? I know you already mentioned having good
The
financials, having sort of
financial, and that's not a function of spending tons of money, Sam. I mean, that's really important because people hear that and they're going, "Oh, I'm gonna have to go spend." You can, but what I'm telling you is like, I ought to be able to sit down with any business owner and say, "Hey, what are the metrics that you use to manage your business to figure out if what you're doing is working and if you're being successful?" And again, those financial statements, they're so late getting to the party
yeah,
that every time you get them, you're just looking back, right?
right,
And you got to run your business today and tomorrow and looking forward. And so I would say, advice wise, is build that like a dashboard, and it can be as complex as you want or on a piece of paper. It doesn't matter, but it needs to be something that you look at every doggone day,
yeah,
and to say, okay, what are those 4 or 5 elements? And they don't need to be 30 or 40 because you can't keep up with that.
yeah,
4 or 5 of the most important elements. I mean, give you an example. I mean, this might not work for everyone, but a business owner might say, "Hi, I want to see my cash position every day." Okay, great. That's one. I want to see trends in my receivables.
yeah,
Are they getting slower? Am I collecting just as fast, or am I speeding up the collection? Same thing on payables. Same thing on inventory. That gross margin. It's interesting when you talk to business owners. Um, if you don't watch it, like if you think about your profit and loss statement or income statement, you got gross revenue, and then you take out cost of goods sold, and then you're left with gross margin. Now that can be a dollar amount, can be a percentage amount too, and we spend a lot of time on that percentage amount. And then you've got those overhead, what you're paying for your offices here and
sure,
and salaries and stuff, and that comes down below it. And then you end up with net income or a net margin. Most time when we talk about margins, I will say I always ask about gross. I do care about net, but I care mostly about gross. I'll tell you why in a second. But a lot of times that business owner is not focused on that gross margin. He's focused on he thinks when I say gross, what I mean is net. And so the reason why I focus on gross margin is because I believe as a business owner, fundamentally you should be able to manage your overhead. I can't do that for you. That's 100% within your control,
Yeah.
right? Managing your overhead. Now the market will dictate how many people want your service or your products or what they're paid for it, and you've got some control over that. You know how you go about actually running your business, but that gross margin, when you see that gross margin is stable or increases over time, that is what gives those business owners the confidence to say, I'm going to go make more investments in people, equipment,
Yeah.
real estate, whatever it ends up being. So I would say that I would say I would offer that up as advice. The other thing that I would offer up as advice is lean on your banker. Like we see lots and lots and lots of businesses. So I might not see another one like Spectruss. Okay, but I have other ones that are your age,
Yeah.
kind of sort of in the service industry. What you're doing is you're not manufacturing metal products. Okay, so we can make some comparisons, but there is a way that you can go about running your business to make it more valuable. And so that's what we spend a lot of time. And I would tell any business owner listening to this podcast, if you have a banker that understands that, that's a very, very profitable question to ask is, hey, what are a few ways that I can make my business more valuable? And I'll say this as a very, very clear example. I did business probably 25 years ago with a guy here locally, $3 or $4 million year revenue, and he was a dad. He had three sons there, and he was just doing everything. I mean, everything, everything. And I'm sitting there going like, what is going on? And he says, well, my sons, I mean, I can't really, trust them. They're not to do the job like they need to. Okay, whatever.
Yeah.
Well, I got in there and it was pretty obvious to me that the sons had nothing to do with it.
Yeah.
The dad was just, I mean, he was in a position where he's going like either emotionally or whatever, just says, I need people to always ask me questions. Well, when that dude died, guess what the business did?
Died as
It
well.
died.
Yeah.
It had 30 or 40 employees, man. I mean,
Wow.
$2-3 million of revenue.
Yeah.
And so we spend a lot of time talking to our clients about that, business clients going like, hey, listen, I'm going to be a little tough on you until I feel like this company is to the point, not just financially, but processes and people
Yeah.
that, if you walked out and got hit by a truck, I mean, there probably a little bit of difference,
Sure.
and some sadness because you're gone. But a business that can run without that business owner is usually probably 2 or 3 times more valuable to the buyer than,
Sure.
and a lot of times that they won't even buy it because they know when you go, the business goes, right?
Right.
So have that, develop what would be a dashboard, that says these are the most important elements of business. Follow them. I would say make sure that you have a very clear picture of things that you can do that would enhance the value of your business. Not only the amount of money you make.
Yeah.
That is indirectly part of it. So I'm not talking about just making more money because you might very well need to go spend and invest money.
Yeah.
So you can bring in people who you're going like,
Sure.
this business will run without me, and that costs money, and that you will make less money for a while.
Right.
Okay, so I'm all about making money. Okay, but what I am saying is that for that business owner, don't be short sighted. Like the idea that I'm going to make a ton of money for 2 or 3 years, but I'm not going to invest in year 4 through 7 or 8.
Yep.
That tends to be problematical because what happens is you'll run into some issues where you're running old equipment.
Right.
Or the industry has run beside you, and around you and kind of left you. So, yeah, those would be 2 of the pieces of advice I guess I would give.
There's real quick. I got 2 more quick questions for you, but I'll just comment on that. A book that's jumped out in my mind multiple times. We're talking, especially that last comment, but I think it's Jim Collins from Good to Great. You read that book,
Yes.
and it talks about one of the business models they find is like the genius that's at the center. It says a genius with 1,000 helpers, and, and
Right.
and he gave examples of like large businesses where, but still is one person at the center
Yeah.
of it, and everyone else is there helping. They can have 1,000 employees, but when that person goes,
Yeah.
they lose the systems and
Yeah.
operations, and it all falls apart. And so, if people listening or watching, that book really helped me get an idea. Like,
It's a great book. Yeah. One of the other thing that he purports is this idea about begin with the end in mind. So, in other words, as you build your business, don't look at it through today's lens. Look at it and say, okay, when I look up in 10 years, what does my business need to look like,
right.
and begin with that idea. And I think that's also helpful.
All right, last two questions.
All right.
So, what does Southeast Bank's next chapter look like in Chattanooga?
Yeah, well, so we're building the breadth of our banking team. I'm 62, and I've been doing this. You told me 40 years, so I believe you. So, we'll be looking for over the next 3 or 4 years to build out the management piece. My role has changed. I mean, I was 100% dedicated to Chattanooga when I first started, and that has morphed a little bit over the last few years. So I do spend a lot of time focusing on Chattanooga, but not 100% of my time, which is what I did when we first started. So I think building out the management piece, kind of next generation, not just me, but we've got some really good bankers that probably not going to be banking in 8 or 10 years. So for me, really hustling and finding those 30 to 40 year olds that we feel like are good fits,
Yeah.
that have the same passion we do to help family-owned businesses. We probably need to add, I would say, three of those type of folks here in the next 12, 18 months. They're not easy to find, and everybody's kind of chasing the same people, but that's who I'm chasing.
Yeah.
As I mentioned earlier, we probably need. We're going to go buy some property this year in Hickson. Probably put an office up there. Toward the more north end of the county. That's a good area that we don't service too well right now. North Georgia is a really appealing area.
Yeah.
I mean, it is Georgia, but it's also the next county over. You know what I mean? With those two or three counties there, Ringgold and Fordo, that really is part of our trade area. And then I'll say, from a larger scope, I mean, we definitely will be probably make some acquisitions.
Okay.
I don't think they'll be here in Chattanooga. I mean, I think it will be Southeast Tennessee but we definitely be looking for acquisitions as we go about it. So those that's a lot of work. I mean, I just said that in about 3 minutes, but
Yeah, yeah. It's a lot.
but that's a few years worth of work.
Yeah, yeah. Oh, it's exciting then.
Yeah.
Um,
Thanks for asking. Yeah.
last question: if there's a business owner is listening to this, wants to start a real banking relationship with you all, what's the best way to do that?
Yeah. Well, I mean, we certainly have a web presence, and they can access us and find out about it like that on the web. We've got two offices. One, the primary downtown office is in Liberty Tower, first floor. And then we've got an office out in Ooltewah as well. So if somebody is in the mindset they want to physically drop in and see what we're about, that's where they can do it. I think the most important thing too is, if you are a business owner and you're kind of looking at your business and going like, I know where I want to go, but I'm not exactly sure the best way to get there. Those are really good conversations to start relationships with, as opposed to trying to start a relationship when you're down the road a bit and you're going like, man, I've got a cash crunch and I'm upside down 75,000, and so we get to start our relationship with
Right.
an emergency,
Yeah.
and it does happen from time to time, but not too often. So yeah, so I think those are two physical locations, and definitely you can get a hold of myself or any of the other bankers there at Southeast Bank, on the web with that email addresses and everything. So
Okay. Perfect. And
be
on
great.
LinkedIn as well. If someone wants to reach out to you.
Absolutely, yeah, absolutely. LinkedIn's a great way to do it.
Perfect.
Yeah.
Well, I think that's a good place to wrap up. But
Okay, it's
thanks
been
so
fun.
much.
Hope it's been fun for you.
It has been. I'm always. I mean, I could keep going on it, but this so many questions, and
Yeah,
come back a
yeah.
second time and we can dive
Well,
into weeds more on it.
I'll look forward to coming back someday. Thanks.
Awesome. Thanks, Ron.
All right, brother.
Appreciate it.